Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with your European Session Outlook. We'll start with the North American markets. We had some major inflationary sets of data come out on Friday. The data seems to be good enough to keep the Fed optimistic about the Fed rate hike. We had retail sales month on month for November, 0.1% worse than expected at 0.2%. Retail sales ex autos month on month, 0.1% better than expected at 0.4%. Retail control, 0.2% better than expected. And PPI year on year for November, 0.3% better than expected. While an interest rate hike in December is widely expected, volatility in commodities markets and the drag on emerging market assets it creates could impact the pace of Fed rate hikes in 2016. US major stock market indexes came unhinged Friday as falling prices in crude oil and worries about junk bond markets rattled Wall Street. Losses in equities throughout the week were fueled by a rout in crude oil prices and culminated in the harshest sell-off in the major stock indexes in more than 2 months. The main benchmark, S&P 500, recorded its steepest weekly losses since August, when stocks plunged on fears of a slowdown in China. The S&P slid 40 points or 1.9% to 2012.37 and posted a 3.8% loss over the week. The Dow is down 32 points and the Nasdaq is down 107 points. The Dixie is down to 97.78 from 97.97. Down 0.7% for the week. Biggest mover in the currency pairs, USD Canadian dollar, 123 pips up, USD Swiss franc, 60 pips down, and USD JPY, 76 pips down. There's no news for today. The investors will be all waiting for the interest rate decision, which is due this Wednesday. All right, on to the EU markets now. We had German CPI year-on-year come out as expected at 0.4% and month-on-month as expected at 0.1%. The targeted LTRO in the Eurozone is over twice higher than the expectations at 18.3 billion, with the expectations at 7.5 billion. The DAX 30 is 300 points down. The CAC 40 is 100 points down. On Friday, today, ECB President Mario Draghi will speak at a conference in Italy, but the speech is not expected to be a market mover. All right, on to the UK markets. The greenback didn't react strongly Friday when positive US economic data came out, and instead, the pound gained, taking the pair above resistance on the 4-hour chart. The UK's FTSE 100 sank 135 points or 2.2% to 5,952.78. The first close below 6,000 since September 13th. It was the benchmark's 7th consecutive loss. Today lacks major economic announcements for the pound. All right, on to the Asian and Pacific markets. In China, trends in the retail sector remain strong, with real retail sales growth at 11% year-on-year in November, signaling the stronger performance of China's services sector. In Japan, we had a Tier 2 news Monday overnight. The tertiary industry index month-on-month came out with 0.4 better than forecast and 1.5% better than previous. It's now at 0.9%. The industrial production month-on-month 1.4%, which came out as previous and forecast. Industrial production year-on-year is negative 1.4%. It's the same as previous. In the Pacific, Australia, we had news in Australia overnight for Tuesday, which we will be awaiting. This is the home price index quarter-on-quarter, year-on-year. And Royal Bank of Australia Assistant Governor Debelle will be having a speech as well. Last sector for today, the commodities oil prices crashed to fresh 7-year lows on Friday after a bearish report from the International Energy Agency projected that a global supply glut could worsen next year. Gold had a range of $17, trading at $1,074. Silver had a range of 38 cents at $13.90 now. Crude oil had almost $1.70 range at $35.42 now. And natural gas is trading at $1.89 at the moment with a range of 6 cents. That was all for today. Thank you for the attention, and I'll see you next time. Goodbye.